Hi, Kurt Jackson, retirement income strategist with KJ Financial in Liberty, Missouri, here today with this week's installment of Your Money Matters. And today, well, we're focusing on really everybody. This is going to have a kind of a, I guess, more of an emphasis on the women, on the ladies today. And we're going to talk about something that we always wanted. We just love to talk about, the topic of life insurance. I say that sarcastically. What we're talking about today, actually, folks, we're going to have to put our big people's clothes on. We're going to have to be adults today and talk about topics that we're not always comfortable talking about. And that's one of the problems with life insurance. It's something we don't want to talk about is death. And most people, when they think of life insurance, they think, if I buy life insurance on myself, the only way anything good comes out of it is if I die. And that's true to an extent, but with certain ways of structuring life insurance, with permanent life insurance, which we're going to talk about today, it doesn't pay if you die, it pays when you die. And since it pays when you die, it has unique qualities that they now have living benefits. And I'm going to get into those today, but we're going to first focus on women. And New York Life did a study with 897 widows. Okay, so these women have lost their husbands at various points in life. And it seems like that what we find is women typically outlive men. So the financial burden of losing a spouse ends up weighing more heavily on women than it does on men. And in this study, they found that many women wish they had, either some or more life insurance at the time of their spouse's death. They found some of these numbers. I'm not quite sure how they worded the questions because the numbers seem to be low to me when you look at kind of the results of everything. But they showed that 47% of widows had wished they had some or more life insurance on their spouses. I'm surprised it's that low. 42% wish they had saved more, the survey found. I'm surprised that's low also, and I'll get to why I feel that way here shortly. Many women remain underinsured for life insurance on themselves, but few surveys or research has really looked at the impact of women on women when their husband dies before them. Okay, now why is this big? Well, I'll tell you this: that the average age a woman becomes a widow is between 58 and 59. Okay, it's pretty young, really. And why is this important? Because, well, longevity, we're living longer. Life expectancy for a female today, age 65, is 88. So that means that 50% of women are going to live past age 88. If they're losing their husbands on average at 58 to 59, that's a long time to live after your husband's gone. So that's going to need a lot of money to help you through that. Okay, we're always worried about dying younger when you have younger kids, and I think this is a false sense that life insurance is something that we don't need later in life, and we've been taught that by traditional financial planning, and I totally disagree with that. And if you ever follow any of the things I write and things I talk about in my videos and stuff, I think you'll know why I feel that way. But today we're really focusing on the women here at the beginning. Okay, so here's among women whose spouses had life insurance when they died, the life proceeds from the policy lasted nearly 2.5 years. Okay, 2.5 years. Yet if you lose your husband at 58, 59, okay, that's 60. Let's just say 60. So 60, 20. That's another 29 years, and you running out of life insurance money at 2.5 years. Yet only 47% wish they had more. See, we're lacking congruency there, in my opinion. Okay, so women wish that their policies, they had enough money in these life insurance policies to last 14 years. I'm not sure what the ages of these women were in this study, but what I just talked about, with you losing a husband between 58 and 59, living to 88 or longer, good chance of all that. I would think you'd want that life insurance to last more than just 14 years. Basically, what we're saying is women aren't prepared for the loss of a spouse. Not that men are either, but I don't know that really very many of us are really truly prepared. Basically, what happened with these widows is they learned too late that they were underinsured, or their husbands were underinsured. Life insurance proceeds are very important, but you need to have that financial security blanket. It is much greater than what we're finding in most financial plans. So basically what happens is women that, as I said, that live typically longer than men, they suddenly find themselves thrust into the role of the head of the household on the death of the husbands. Older women probably weren't necessarily prepared for that because it was just kind of a cultural thing. I think women younger, like my age, and I'm almost 50, I just turned 49. I think that those women that are my age and younger are more not I don't want to say equipped, but more ready to take over financial things because I think they've looked into it and they haven't had that traditional, the stay-at-home mom thing as our parents maybe and our grandparents certainly did, where the mom really wasn't too involved with the financial situation. So that's changed, which is a good thing because women are more likely to know those things. So, which is good. Okay, so basically. I want to transition that I guess what I want to the point I want to make on this is, ladies, if you're married, even if you're not, but especially if you're married, you need to make sure that you've got enough life insurance. And when you're talking, oh, I've got 200,000 with work and another 150,000. I mean, I'm talking you don't $400,000, $500,000, $600,000 in life insurance isn't going to cut it if you need it. With today's low interest rates. You could easily need $1 million, $1.5 million, $2 million. I know that sounds like a lot, and you're thinking, well, Kurt, you just sell life insurance. You're just trying to get us to buy more. And there's certainly truth in that, but it's not just because I'm trying to get you to buy more because I make more when you buy more. I'm trying to make sure that my clients are financially covered. Okay. A prime example, had an advisor talk about, he had a client that Mrs. didn't work. Mr. was making 250 grand, had $1 million life insurance policy, making $250,000 a year. So he died, and they were in their 40s, and it was the early 40s. He said, I'm trying to remember because I don't have it all in front of me. He said that died in the early 40s, and he got a call from the spouse. Talked to the spouse after the funeral and all that. And she goes, well, we really need to sit down and talk. She goes, because I'm a millionaire now. She got $1 million, and she was talking about buying a lake house and all the things she wanted. And he's like, you realize that your lifestyle was built on a $250,000 income, okay, and that income is gone now, and you have $1 million. So, if you just lived like you did before, you're going to run out of money in 4 years or a little longer, depending on where you have it. And she was shocked that was the case. So, someone making 250 grand, they might literally need $2, $3, $4, $5 million in life insurance to make sure that their spouse and their kids can continue the lifestyle that they would want them to live. And I know that, once again, that sounds like I'm just trying to sell someone more life insurance, but it's the truth. Okay. And when you talk about lower interest rates, that means we need more life insurance, because where are you going to put that money that's going to be safe in order for you to live off of it for many years afterwards? So life insurance has changed a lot. It's evolved. This is running a little longer than I thought, so I'm not going to go too much into the other part of this about the life insurance. But I'm finding that more and more people are watching these things. They're reading my stuff, but a lot of people aren't reaching out to talk to me. I hope maybe they're talking to their current financial advisors, but if their current advisors are traditional thinking, they're not thinking along the lines that I am, and they're not probably making sure these things are there, because they may not be as a big a believer in life insurance because that's not their specialty, or that's not the area that they think is important. And I think that can be a big mistake. I see examples of that all the time. So I guess what I want to say is this, reach out to someone, reach out to me. If you're watching this, you probably know me, because that's where most of my, people I put this out, they know me or know of me or know someone that knows me. So I implore you, I encourage you to pick up the phone, call me. Let's talk about it. I'm not a high pressure guy. If you look at my stuff, I'm just really out there trying to help people, trying to make sure they understand the path that they're going down may not deliver them what they think it's going to deliver them. And God forbid something bad happens. Most people are woefully unprepared for that. The last thing even though I'm divorced, the last thing I would want is for my kids' lifestyle to have to drop off if something happened to me. I still have a big life insurance policy on myself in case something happens to me. So I know my kids are taken care of, because, like I said, I wouldn't want them to have to change their lifestyle because something happened to me. And I think that most dads feel that way. And I'm not saying the moms don't either, because I'm sure the moms do too. But the numbers bear out that the man dies before the woman most of the time. Women live longer. So we need to make sure that we are fully prepared financially to take care of that road if that happens. We have vehicles that mean that don't term policy pays if you die during that term. Permanent life insurance doesn't pay if you die. It pays when you die, no matter where that is. And we look at permanent life insurance more as a tool for a lot of different things. And if you watch my videos and read the things that I've written, I think you get a pretty good idea of that. I could start that, but I could talk for that for hours. And we don't want that because I'm running a little longer than what I want to do today anyway. So I do implore you to reach out, talk to someone. I'm happy to talk to you about it. Make sure they know the things that I know that I've been talking about, because if they don't, then you're probably going to end up being still at risk of something bad happening and you not being able to continue the life that you want. So I want to thank you for tuning in today. Please share this with any friends, family, anybody you care about that you think might benefit from this. And I do encourage you to pick up the phone, call me, or email me, and let's talk. And let's see if you're prepared, if you financially are prepared, and we might be able to find some different ways of really making your financial life a lot better than what it is, a lot safer in case something bad happens. And if nothing bad happens, then we're even more prepared for to be able to enjoy in retirement, because that's how we structure our plans. Have a great day, and I'll talk to you next week.